Howdy, Jacob here. Today we're looking at Franklin Electric Company in the machinery industry, 4.4 billion market cap, 4.3 billion enterprise value. They design, manufacture, and distribute water and fuel pumping systems worldwide and founded in 1944. Their revenue growth is pretty good over the last 10 years, but it's very seasonal. It's very volatile. We see revenue up as much as 33% in 2021, but we do see 2 years of declining at 5% and almost 12%. Gross margin and operating margin both up slightly from 10 years ago, not at their peaks, but very consistent, honestly, over a 10-year period, and a dividend that pays out a very reasonable amount in relation to earnings per share. We'll see what that is in relation to free cash flow. But we also see a very good return on invested capital. We're looking at low teens here and increasing. So, again, a lot of positive things here. Good growth in revenue, increase of margins, increased return on invested capital, all seem very positive to me from just looking at the numbers. We see that on their balance sheet, they have 85 million cash on hand and 88 million long-term debt, 12 million short-term debt. I mean, that's pretty much able to pay off with their cash on hand. So I'm not really worried about that. And it's way less than their 1 year free cash flow. So they essentially have no debt, no net debt. Their use of free cash flow of the last 5 years is their dividend, which they pay out maybe 20% or so of free cash flow. Their debt reduction, share repurchases is a good amount as well, and then acquisitions. So I would say acquisitions is the largest form of capital allocation, and then a little bit to debt, and then maybe 20% or so to share repurchases and to pay out a dividend. So they definitely spread out their capital allocation. Hopefully they're doing what's best for the business at any point in time. They're likely, probably not, in all honesty, they're probably just allocating some here, some there, as the average company does. But that's something you would do a deeper dive on if it looked like an attractive price at this, based on your initial analysis. So for me, I'm going to complete my initial analysis by going over what do I think the revenue growth will be, and with a bit of money going to of capital allocation going towards acquisitions, let's say maybe 30 to 50%. I think that they've been around for quite some time. I don't think we're going to be seeing massive growth, but I do think 6% is reasonable. They are increasing margins. Margins are fine. Return on invested capital pretty solid with 6% growth. I'm going to put them maybe a little bit above a market average PE, price to free cash flow, saying that at the end of 7 years, growth is likely going to be pretty close to market, possibly a little less, but there's double-digit margin, double-digit return on invested capital, although they're spending most of it on share repurchases and debt reduction and a dividend. They are spending money on acquisitions that can be a form of reinvesting your capital back into yourself and growing the business. And so if they're able to get those double-digit rates of return, that's going to be very positive for you as the investor. And then when you look at averages for margins historically, I'd feel pretty comfortable with, let's say, 9 and 10%. And for share change, let's say 20% of capital allocation, looking at roughly 40 million, it's about 1%. And I guess I didn't offset. Okay, yep, I'm fine with that. Dividend, how have they increased that in the past since it's just about 20%? Okay, I'll increase it with their revenue growth. So capital allocation stays roughly at 20%. I'm comfortable with that. It still needs to fall roughly in half before we get the return we're looking for here. And so not quite close enough for me to do a deeper dive to see whether their capital allocation makes sense to me or not. But based on initial analysis from the numbers perspective, it does look like a good company, but from a price perspective, not quite at one that makes a whole lot of sense to me and is something I want to do deeper diving at the moment. Hope you enjoy the video and have a great day.